Yo, AG, my boy, what's going on, man?
Man, appreciate you having me, bro. How was your holiday?
It was good. It was good, brother. Man, I appreciate you making the time, man. I know, like, you're busy. I'm busy. Kids, like,
Yeah,
just celebrated, another birthday with the boy. So that's good, man. Now, holidays were good. Man, it's so cold here. I
really.
don't know, bro. I haven't left the house in a week. It it has been a high of 30, and the wind chill has been like 15.
Go ahead, move to Houston, bro.
So I might have to get back to Texas.
Yeah, need to.
Man, what's crazy? It's like usually we can like how we used to do, right? Like Sammy and I would just like go to Miami for a week,
Yep,
or we come down to Austin for like 2 weeks, work out and like work out of our like Airbnb.
yep.
Now, two under two?
Yeah, it's
Nah.
crazy, bro.
You're
It's
just
crazy.
stuck. You're
Yeah,
just stuck, bro.
you stuck at the crib. There's limited mobility at that point.
Super limited. So I'm over here struggling, man. Like this is like you see this my lights in the back. Like this is the
Yeah,
only brightness I get
that's
this week.
hilarious. Yeah. No, I get it.
But man, yo, so man, thanks for like I said, thanks for jumping on, bro.
Yeah,
I always want to start a little differently. And for this one, I think moving forward, this is kind of how I started. What does personal growth mean to you in your life?
yeah. That's a good question. I think for me, personal growth just means taking targeted action towards mental development, physical development, financial development, whatever that means, right? So for me, I try to maximize conversations with people like you, try to maximize the amount of information that I consume that can help me personally. And then obviously like if I better myself, then I'm bettering my relationship with my wife, the kids, the whole nine, right? And so I think
Yeah, nice.
a targeted approach to being better, right? And so
Man, I haven't had anyone put it in that like framework. I love those three buckets.
yeah.
Like, how do you take stock of that? Like, how do you measure that, each year? Are you like, hey, this year I need to focus more on financial, or like, typically how do you, you measure your personal growth?
Yeah, so I think the buckets are gonna stay the same, right? So like for all of us, like we got families now, so like we always want to be better, do better for our families, right? So that's not gonna
Yep.
change. I think financially, like I don't think we're gonna say like in 2025 I want to make a little less money. Like I don't think that's a factor for anybody, you know. And so for me right now, like I don't know if I told you, but I'm on 75 hard, and so that's my way of
No, no.
yeah.
Also, people out there, I talk to Anthony like every day. Did not know, did not know this.
So that's kind of my way of like, all right, dedicating 75 days in a row to, again, personal development, right? So I'm reading,
Yeah,
working out, focusing on my business. And so I think every year there's got to be some sort of that component mixed in there so that you can kind of hold yourself accountable to make sure that you hit whatever metrics or goals you just kind of set out for yourself, you know? So,
nice,
yeah,
nice. Yeah,
man,
man. We're gonna dive into your story.
yeah,
I mean, you have unbelievable stories. So, I also like to give a quick little history about like how we met. It's
yeah,
funny, we met in Austin, met at this apartment complex that we both
yeah.
lived at. We were starting in the Oracle Class O program, where I literally remember we were in that big like
The
I don't even
lounge.
what you call it. It's like a lounge room. It was like
Yeah.
massive. It's like 30,000 foot ceilings in this.
Yep.
It looked like someone's living room, like in an apartment complex.
Yep.
So,
Yep.
but no, I feel like that was obviously the first time we met. And then, bro, who would have known? I know you would have guessed this. I would have. Like, we would have been like close friends for this long. Like,
Crazy.
it's crazy, right? And it's a true testament that like distance is a true test of like your friendship.
Yeah.
Like,
Thousand percent.
if distance, is brings you apart, then like you probably weren't the best of friends anyway.
Exactly. Yeah, no, I mean, it's a good point because it's like once you are no longer in the same city, you got to make sure you make the effort to like stay tapped in with certain people. You know what I mean?
For sure, man. And I've always told you, you above like even some of my closest friends that like live close to me. I talk to you more than I talk to
Yeah.
them
No, facts, bro.
because you're consistent on the friendship, man.
Yeah.
So like I appreciate you, bro, more than anything.
Yeah, absolutely.
And then we'll jump in, but I have to give like this is just like the funniest story. Listeners out there, if Sarah can hear me, I don't know if she's around at
Yeah.
all.
Do that room.
This
Yeah.
is the first this is the first time, probably the last time in my life where I truly witnessed love at first sight.
No, that.
Anthony looks at me. It's like our first week out.
Yep.
We're at a bar. He looks at me and he's like, "Who is that?" And I was like, "That's like what's the name's friend? She's in our class at Oracle." And he was like, "I'm gonna marry that girl." Like
Hilarious.
hadn't even talked to her yet. And
Hilarious.
I was like, me
Right.
and Richie were standing there. We were
Yep.
like, "All right, yeah, man, go talk to her." And from that day forward, inseparable. So
Yeah.
I saw a magic moment of love at first sight, and it's great to see 2 kids
Here
later.
we
So
are,
I gotta throw that out there. Yeah,
Yeah,
two
yeah.
kids later, love to see it, brother. Tell her I
Yeah.
said hi.
It's been a blessing. For sure. Yeah, no, we think highly of you and Sammy, obviously. And so yeah, man, it was a blessing that it worked out. She's my partner in crime, and we just kind of, grinding it out together.
Oh, I know the power couple. So like, that's a good segue. Let's jump right into it. Like, so did you always know you were going to be an entrepreneur?
I've always had like the bug to create cool ideas. Like even in high school, it's kind of like the what if, like what if you could, do this with this, right? And
Yeah,
so
yeah,
I kind of took action when I was in college, like my sophomore, junior year, because they had a really good entrepreneurial program at Iowa. So I joined it. I started talking about my ideas and started developing products relatively early on in my sort of journey, if you will. And so like I've always been fascinated with just cool ideas. It was like the execution part that I think is the hardest. And I think you mentioned this on one of your other podcasts. Is like it's all about execution at the end of the day, right? And so I will say yes. Like I've always had that bug, and it just kind of took a little bit of pushing and mentoring for me to like actually execute on these ideas. And so here we are.
yeah. No, I was gonna say immediately yes because when I met you, I knew about the Iowa thing, and I was
Yeah,
like, you were just even though you were at Oracle, like you were always just like hustling. Like I
yeah,
just there's always something going on. You're always talking to someone, networking. So like I would say from like an urgency and just like energy, I feel like I learned a lot of that from you,
yeah,
just like putting yourself out there. You would like walk up to people we didn't even know and like just spark a connection, talk about things, and like it just, you notice like it always leads to something.
yeah,
So I will say, like that energy I've always learned from you.
yeah.
Now, as you go through, because I've been with you, right? So like as you go through Oracle, and then you start making other moves, like what talk to me about the moment you and Sarah decided that you were gonna go into real estate.
Uh, I think even going back to Iowa, like I've always had mentors that were saying, "Hey, Anthony, like you got to get involved in some sort of real estate." And so for me, it was all about the timing. So like when I was in Iowa playing ball, it wasn't like I was focused on trying to like acquire a property.
Yeah,
And
yeah, yeah.
so it was when I moved to Houston where, Sarah and I moved in with her parents. We were stacking. This is like 2018, maybe 2019 at that point. And so we had taken a couple courses. We found some mentors, and I had two or three mentors like, hey, now is a good time to get in. And so we were like, you know what? Like, let's just make sure that we truly understand some of the foundational principles of like how real estate even works and making sure that we can like understand how to analyze a deal and the whole nine. And so for
Yeah.
me, it did take us a little bit of time. But I think, 2019 is when we kind of jumped in and bought our first property. And then, I was like, hey, Sarah, you should probably get your real estate license to kind of cut off the bottleneck. And so like a lot of these things kind of fell into place, but I think 2019, 2020, when COVID hit, really helped kind of supercharge our investing journey.
Yeah, no, I definitely remember that time. Like, I mean, in to me, and obviously, and probably a lot of my listeners, is real estate's really complex
Yeah,
when it comes into like, hey, what type of properties do we buy? Do we flip? Do
yeah.
we wholesale? Do we do Airbnb? Like, talk to me about, some of the strategy around like how you decided you wanted to buy, hold, sell, your business plan essentially
Yeah.
for your real estate portfolio.
So I think like for us, it was dependent on the goal, right? For us, we were like, okay, how do we maximize the income that we want? Some people invest in real estate because of the tax advantages and you can write off stuff like called depreciation, whatever. But for us at the time in 2019, it was like, we want cash flow. Like that's what we're focused on. And so we didn't really want to flip anything just yet because we were like, that's a bigger renovation budget. If it doesn't sell, you're paying hard money. You're paying some interest on hard money, and so we were like, all right, well, what's the safest way to go about this? And for us, the safest way to do our first deal was to buy a home that was relatively inexpensive. It was not 93,000 to be exact. And we had a mentor that referred us to a contractor who was like, "Hey, we can get this done, fix it up, get it rent ready for like 15,000." And then we leveraged hard money, and they gave us like 108, and we had a little bit of money left over. And so like it was just like a home run first deal for us, where it's like very low risk. We had a good tenant, and so to answer your question specifically, it was like understanding how to make sure that you can minimize risk as much as possible when you get started. So like you don't
I
have a
love
bad
that. Yeah.
experience, and then that ruins like the next year or two when you're like, oh, I don't want to do it again.
Yeah. Well, I feel like that's what deters, people so much from real estate is they feel they need so much up front to
Yeah,
get started. And if they lose it, they lose maybe half of their net worth or like,
yeah,
they lose a lot, right? So talk to me about like specifically like that first investment. Like,
yeah.
what did you learn from it? How much did you put down or like
Sure.
felt like you needed to put down?
Yeah,
I think let's start there.
yeah, yeah. So basically, like there's hard money, which means like you can get money from a group or an organization, and you pay higher interest than you would a conventional lender, right? And so that was kind of scary as well, but we got over it. And essentially, on our first deal, we said, "Hey, look, we bought this deal for $93,000, and once it's fixed up, it's going to be worth $145,000, right?"
Mm,
So they call it the ARV. And
yep.
so for us, it was like super critical that we truly understood like how to run our numbers accurately, because at the end of the day, real estate is math, right? If you got a tenant in there paying X and your mortgage is Y, like you can make the difference. And so basically, with hard money, they gave us 75% of the after repair value, right? And so they gave us like 108 or something like that. And so, like I said, we bought it for 93. The hard money lender gave us 108, so we had some cushion, we had some leftover, and then we used that to fund the rehab. So I think we were all in out of pocket like $7,000. So like not a ton of money to do
Yep.
a real estate deal, and it was just us.
Man, that's
And
awesome.
the returns were crazy, bro. Like we
Yeah.
held it for like two or
That's
three
simple
years.
math to me.
Yeah, like held it for 2 or 3 years, had a great tenant, and then we sold it to another investor 2 or 3 years later, like tripled our money, and then we moved on to the next one. Like, and so it was just like a cool first project. Like there was
I
obviously
would
some
say, yeah, that's a home run for sure.
yeah,
Like,
yeah,
is there anything looking back, you probably like knowing what you know now, you would have done differently, or you're like, you know what, that just worked out exactly the way we wanted it to.
I think the only thing that we would have done is probably held it for like 6 to 12 months, 6 to 12 months longer. But it's like you just never know,
You never
right?
know.
If we
Yeah.
held it, like we could have been in a market that's like none of the homes in the area are selling, and so I mean, I
Yep.
think we got out at a good time, and so that was truly a blessing on that deal for sure.
Yeah. So I think like, that's a good lesson too. And, I think we'll get to where you are now, which is
Yeah,
crazy. But just knowing, like, I think most people struggle so much about where to get started.
yeah,
It seems like you get bogged down in all these thoughts and all these fears. And I started this podcast so that like a lot of the people listening can hear like, hey, this is exactly how we got started.
yeah,
And to discover that like, hey, you actually can get started a lot less than
yeah,
what you think, right? They only see where you're at now.
sure,
So from there, let's say, obviously that first deal went really well.
yeah,
What were the conversations like with you and Sarah at that time about like, hey, where do we go next? How
sure.
do we efficiently scale this business?
Yeah. So before I answer that, I want to go back to the how. I think from a how perspective, like if any of your listeners are trying to get into, whether it be real estate or
Oh, there's a lot for sure.
entrepreneurship or whatever, like what I think the most vital thing is you gotta have a mentor. Like you
Oh,
gotta
I
have a
love that.
mentor,
Yeah.
you gotta have somebody that you can kind of like, throw ideas by or whatever, because at the end of the day, like if you're doing this by yourself, you're just on podcasts or YouTube, and there's
Yeah,
so much information, it's
it
hard
is
to
overload for
navigate
sure. Well,
where
talk
to go
to
from
talk to
there.
the, like you and I agree on this so much. We talk about this all the time.
Yeah.
But I think what I've noticed lately is just, and I've said this in previous pods, is how much, other entrepreneurs who are in your space
Yeah,
are willing to help.
sure.
And you just
Yeah,
got to go ask. Now, you
yeah,
may not get to them the first time, maybe be
yeah,
busy, but you got to treat them like a prospect in order to
yeah,
find your mentor. Like
sure.
you, by far, of my friends, are the best at that.
Yeah,
Talk to the listeners. Like, let's just stay there for a second. Like, talk
yeah,
to the listeners about that. Like, just finding the right mentor.
yeah. So Funny story. Like, so Sarah and I are going to an event this weekend with a guy who I just randomly reached out to because when we decided to get into multifamily, I had take my experiences from single family. Like, okay, if we're gonna, transition and shift to multifamily, I've got to find some people that are in this space doing well that I could really just get some insights from, right? And so I just DM'd this guy on Instagram. He didn't respond. Found his number online. I called him. I was like, "Hey, look, I shot you a message on Instagram. Not sure if you saw it, but I'm Anthony, based here in Houston. My wife and I are looking to get into multifamily. We'd love to like see if there's a way for us to collaborate." Long story short, I mean, that was like 2 years ago, right? He's like, "Man, like I knew you were gonna kill it because you called me. I've never had anybody do that. Blah blah blah." And so I think I say that to say that like you've got to just be super intentional about like who you talk to and when you talk to them and like what information that you're trying to get because like you said there's people that will are willing to help you, but I think they want to see you kind of putting in some work on
For
the back
sure.
too.
They want to see you bootstrap a little bit. They want to
Yeah,
see
yeah,
what you've
yeah,
done. How creative, how much have you got done in a
yeah,
short period of time
yeah,
before you go to them. And
exactly.
you've done a good you guys have done a good
Yeah,
job
yeah.
of that.
And so, I mean, I think that's just super important, just like surrounding yourself with some good people that have your
Yeah,
best interests. And then to my earlier point is like actually paying somebody for a service for them to help you too, because I feel like a friend or somebody that you meet on the street is only going to help so much, and after a while they're like, all right, bro, like I can't just be giving you all this free information. Like
for sure.
you got to pay for something, right?
Yeah.
So I'll definitely leave it there for sure.
So I'd say the headline there is prospect
Yeah.
your mentor.
Yes. Yeah.
But bring
Prospecting.
value. But bring
Yeah.
value. It's no different
Yep.
than prospecting a customer, right? Bring
Mhm.
value and they want to help.
Yep.
But
So,
it's got to be a good use of their time. So that's
yeah.
awesome. So you find good mentors, you know, they kind of coach you on what they've done, maybe some of the
Yep.
lessons they've learned. But I think you and I both agree on this. Ultimately, you still have to make a decision on your strategy and where you want to go with your portfolio
Yeah.
because you have to live with that portfolio.
Yeah.
So talk to me about some of some of the, obviously the conversations you and Sarah had, but mainly what were some of the main concerns you
Yeah.
had about scaling the business and where to go next?
So after we did that first deal, we started to do many more sort of single family deals, right? And I've got a lot of buddies that are still playing professionally that have invested with us, and we were like, well, how do we just supercharge this, right? And so Sarah and I were talking, and we're like, well, you can really only buy so many single family homes at a time unless you're buying like a portfolio with 10 properties in it. And so we thought, well, maybe we should get into multifamily. And the conversation was, well, for us to get into multifamily, we've got to really understand like what that really means and what it looks like. And so that kind of goes back to my earlier point. Like, let's just prospect for people that are already in the space, find a mentor. What is that going to cost? How will our current investors take the fact that we're moving to a different asset class, essentially, right?
Yep.
And so it was just more of like, okay, we can probably get good returns. They're going to get more tax benefits and advantages with multifamily. There's a little sort of an economies of scale with that, and so she and I were very much aligned with like we gotta just supercharge this thing because buying one house at a time is great and it does well, but it just takes a really long time, right? So
Yep.
that was the conversation. It was pretty straightforward, and yeah, we're glad we're making this shift, and we still dabble in single family. Like we got a flip going on right now, but the majority of our time and efforts are focused on
Yep.
large scale multifamily. Yeah.
And I think you and I are a lot alike in this regard where like, you're starting your company
Yep.
and you still have your W-2.
Yep.
So let's start there too, right? Like I think like talk about the balance of managing your U2
Yeah.
while building such a honestly powerful portfolio.
Yeah, I think like the beauty of it is like you can take more risks, right? Because it's like we work at big companies. Me personally, I work from home, so I've got the flexibility to run both relatively effectively, right? Because I've got
Yep.
partners and stuff. And so I won't say it's easy, but I mean it's relatively easy at this point. And so like if I want to go look at a property during lunchtime, I can. If I've got to set up a meeting during the day, I can. If I don't have anything else on my other calendars, it just kind of makes the decisions to do certain deals a little sweeter because for me, what I've seen in the industry is like a lot of people make money when they're buying these bigger deals based on the acquisition fee. And
Yeah.
so if their only income is tied to that one thing and they don't have any other income, It's like now they're trying to force deals. They're trying to like make things work that probably shouldn't work. And so it
Yeah.
just for us, it just like gives us the flexibility to like make those decisions because we know that we have income from from other sources. And so yeah, it's been going well. Like we've talked about walking away from the W-2, but for me, it's just like I've got so much flexibility that like I don't want to cut income just to say I did
Yeah,
it.
you're
You
big. You're
know,
big on that. You're like
yeah,
you you think you I think like you think about it like you have a number, but I don't
yeah,
think there's really not much of a number right now that like
yeah,
you're
yeah.
like, nah, we're giving away we're giving away income.
Give it away,
Uh,
yeah, give it
yeah,
away.
yeah, that's how I've thought about it too, right? Like, so um well no man, I mean I think that's I think that's like one of the biggest challenges people have right now is like they want to put so much time into like either what they're doing but
Yeah,
they're still trying to manage like their current job
yeah,
and I think there's something to be said about like being able to do both.
sure,
I think it's just about obviously prioritizing your time, but
yeah,
talk to me a little bit too about you know you started, first deal went well, a couple deals went well.
yeah.
Talk to me about a deal that you were just crushed by, like you thought should have went well and just
I guess there was one deal like when we were early on, probably our fourth or fifth deal, and we were focused on like one strategy at the time, right? We were going to flip this property, right?
yep,
So we went in, we walked in with the contractor, the whole nine. We were like, all right, this is what we're going to pay for it. And then when we got the appraisal back, or they call it like a desktop appraisal to figure out like how much actually the home is going to be worth once it's fixed up, came back
yep,
drastically lower than we
oof,
projected. And so what happens is like I don't know where you live. It's like if you're on one side of the main road, it's like X, and then if you're on the other side, it's like Y. Like it's a big difference. And so we
oh
didn't
for
really
sure,
understand that
yep,
yet.
same here,
And so what happened was we had to kind of back out from that specific deal because we only had one strategy, which was the flip, right? And so when we backed out a couple months later, we realized that somebody else, a more experienced investor, had came in and they wholesaled the property to another investor. And so we probably could have wholesaled that for like 50,000. So we basically lost out on $50,000 because we were so kind of narrow focused on this one sort of exit strategy, which was the flip. We didn't think about, wholesaling it to another investor or
yeah.
turning it into a rental. And so that was one of our biggest, I think, mistakes early on. Is like not being creative in terms of like how we wanted to exit that specific opportunity.
Yeah, so being obviously not over planning and
Yeah.
sticking so much to a plan that like you
Yeah.
think will work versus being a little bit more flexible,
Yep.
fluid in like the market, street, location
Yep.
dynamics
Yep.
is probably just like, would you say that's probably the number one lesson in real estate? Because I feel like
Yeah.
that's pretty big deal in
Yeah.
real estate.
Like outside of like obviously understanding how to run your numbers and location, all that is like if you get into a deal, like how do you successfully navigate that deal to maximize the outcome, right? Like if you got a rental, can you flip it? Can you wholesale it? Can you leverage subject to? Like there's so many different creative strategies to get out of a deal. You just got to have the knowledge and the insight and the support system to make sure that you can navigate it successfully, you know?
Nice,
So
nice. All right, man. I love that. I love that.
yeah.
So I know a lot of things that are going on right now with the business because you and I talk
Yeah.
a lot, but you know, tell me about the first big jump where you're like, hey, if we can jump to this level of this deal and this unit size,
Yeah.
we will be able to compound from here and just take off.
Yeah.
So like
Cool.
whether it's 1 to 10 doors or like,
Yeah.
whatever.
Yeah. So when we made the decision back in October of 23, is when we hired our coach, actually, our multifamily coach. He's got like $200 million worth of real estate. And we kind of told him our goals, like we wanted to do. And so after kind of working with him for 3 or 4 months, we identified an opportunity out in Tucson, so 94 units. And although not in our backyard, we felt that there was a team out there, other partners that we could work with to ensure that the project would go smoothly. And so, like we found the deal, we underwrote the deal, which means like we analyzed it and truly understood the financials. Right, we looked at the historical data to see like how it's performed in the past. We figured out like if there's a value add component, which just means like if we're charging $1,000 today, how do we get to 1,300? Like, do we have to just renovate it more? Like, what do we need to do for that? So that was kind of our biggest jump, right? So we partnered with, three or four other general partners on that. We raised some outside equity, and so that was kind of our first big deal. And then, 3 or 4 months after that is like when we did our largest deal, which is here in Houston, 148 units. And so kind of the same approach, right? So
So
we were
93. So the first one was 93 units
94. Yep.
or
Yep.
94, and then you go to the 140
48.
plus
Yep.
148.
Yeah, yeah. And so like they are basically the same. Like I know the unit count is obviously like bigger here in Houston, but like the principles are the same, the process is the same, right? You got to
I
find
was
it,
gonna
you got
say, yeah, that's
yeah.
because you're at the same type of scale, and you
Yeah.
need to probably go. I think the biggest challenge in that one is like figuring out who you're like. I think you mentioned right that like the partners you're going to
Yeah.
invest with, because
Yeah.
once you do that, you kind of know how to have that conversation for that next
Yep.
unit. It's just I think people like, how do I get those first four investors to
Yeah.
buy into our strategy and what we're doing?
Yeah.
And know what how to have those conversations. So like was that another part of like the mentoring? You kind of talk to some folks, or that was just like, hey, we're learning trial by error here, putting ourselves out here and figuring out how to communicate that value of what we're trying to accomplish?
Yeah, I think for us, like we had already been kind of building up our expertise in real estate overall, right? So from basically 2019 to 2023 to 2024, we wanted to become experts in the space, right? And so like although we shifted to a different asset class, like when we were going out to investors, we didn't really get challenged on the fact that like, hey, you're doing multifamily now, you were doing single family, because we already had the foundational knowledge and insights on like how real estate works. Most people don't understand that like multifamily is it's a different ball game. Like the way you analyze a deal, the way that you like raise money, like it's totally different. And so for us, it was just mostly lean on the fact that like we had grown a community online. We had already had investors. We were building another community specifically for multifamily. And so for us, it was just like making sure that we had some sort of thought leadership based on the previous deals that we've done, which is why we've been able to kind of like pivot to different asset classes and raise capital, and do some pretty good deals.
Yeah, and I would say I think this is true in any industry or anything that we do. Like the power of experience.
Yeah,
The CEO at when I used to work at AWS, he says, I love this saying. He's like, there's no compression algorithm for experience.
yeah,
So like there's no code or algorithm you can
yeah,
build. Experience is most important.
yeah,
And so like for you guys, like having that experience of like learning and growing from like that's why I like the deals that like were a little more challenging, right?
yeah,
Is like having that experience is ultimately what helps you get to that next big deal.
yeah.
And so I love to drop the hammer here right now. How many doors are under management?
So we've got 148 plus 94. So we got those two assets. And then we're working on a bigger project that is here in Texas. It's about, I think it's 168. Still pursuing that one. And so those are the kind of the two biggest assets we've got. Like I said, we've got a flip, but I think from a dollar amount, it's basically like 33 million dollars worth of real estate right now. And so
Love it, dude.
want to get up to
Deserve
100
it,
million in
man.
the next year or two, but not forcing it by any means. Obviously, it's got to be the right deal, and so yeah, that's kind of where we are in our journey.
Could you, if you could, and the way I would think through summarizing that is one to two, maybe three deals could
Yeah.
change everything for you
Oh yeah. Yeah. Real quick.
real quick. I mean,
Yeah.
that's the power of real estate, in
Yeah.
my opinion, is you get the right deal at the right time, you
Yeah.
power through, could change your entire life.
Yeah.
At least the
Yeah.
trajectory and where you're trying to take your business. Like it could
Yeah.
change everything. Like, and so talk to especially probably the 148, like
Yeah.
how long now it probably varies, right, depending on time and
Yeah.
pressure that the person is trying to sell, but due diligence and everything, like how long does a deal like that take typically?
Um, Probably anywhere from 3 to 6 months, right? Because what happens is you gotta identify the opportunity, whether it be off market, which means it's not listed on like you
Yep.
know, LoopNet or whatever it is. Or it can be an opportunity that's like a broker, which is basically like a realtor for multifamily, you call it brokers. A broker has and owns this specific sort of opportunity that like he sent it out to a couple of investors and we'll kind of like bid basically. And so before anything, right, you've got to underwrite it. And what that means is you've got to analyze the deal. So you've got to look at the T12, which is basically like the trailing 12 financials. You've got to look at the rent roll, which just basically means like everybody that lives in the apartment, like who's paying on time, and
That's a
you've
good
got to
point.
look at the location. You've got to look at everything, right? So like just understanding and underwriting the deal could take, this is called a week, right? Once you do that, you've got to look at like the financing, right? So you got to work with the lender to figure out like what the loan to value is going to be. Is it going to be 65? Is it going to be 70? And then based on that, you got to figure out how much equity you got to have to raise, right? So like for the deal here in
Nice.
Houston, we bought it for 18 million, right? 18.7. And the bank gave us 12, right? And so there was obviously a delta. There's 6 million delta, and then we've got to raise money for reserves, capital improvements, and all that, right? So basically, the bank gave us 12. We had to raise an additional 12 because of the things that I just mentioned. And so I
That's
would
something to think
say,
about too.
yeah,
Would never think about that. That's such a because you think about that in your own like you go
yeah,
to buy a house for yourself, you need
yeah,
reserves. So
yeah,
like as an
exactly.
investor, it's the same thing. I never really thought about it that way.
Yeah, yeah, reserves, the improvements, right? So we got a budget of like $2 to $3 million for the roof and the clubhouse and renovating all the units and all that. And so I would say anywhere between 3 to 6 months, bro. It's a long process for sure because there's you got to walk every unit. You got to make sure that your financing is
Yeah,
good. You got to make sure you can raise the equity,
that's
like
true.
all that. So
But think about that, right? That's still kind of the same premise.
yeah,
3 to 6 months of your life
yeah,
to hold 18 million worth of real estate value
yeah,
that appreciates at a minimum, probably what 3 or 4% a year at
yeah,
a
yeah,
minimum, right? Like, I think the story there is take the 3 to 6 months to get the
yeah.
deal done.
Exactly. Yeah, yeah, for sure. For sure. Yeah, it's not in the grand scheme of things, it's not that long, you know?
No, 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 not at all. Because what you're gonna be just sitting there doing something else for 3 to 6 months anyway, right? Like something probably not as near productive.
Yeah,
So even if
exactly. Yeah.
it's the most, I think it's a long-winded way of saying no matter how stressful that 3 to 6 months is, again, that's 3 to 6 months that could change your life.
Yeah. Yep.
If you're just getting started, you're like, man, I've had some success and I'm trying to get to that next level. Like,
Yeah.
this is what it's going to take for me to just lock in. And
Yep.
that's where I think that personal growth comes into play
Yep.
is talk to me about how do you feel about, the person you had to grow into to get these kind of deals done? And I
Yeah.
think that's the summary I'm trying to explain to people of like how important personal growth is.
I mean, I think for me, and I think you listen to Jim Rohn as well, but it
Love him.
was really just like tapping into a different mindset, right? Because I think all of us like, and maybe there's some doubts. I'm like, oh, can I do this? Can I sit in the same room with these people that own $200 million worth of real estate? And I think the reality is like, you know, although most of the people that I interact with are a little older, at the end of the day, at one point they were 30, right? And so um,
Yep.
I think they respect the fact that like there are younger folks that are trying to tap into the space, even though the barrier of entry is a lot more challenging than it is in the single family space. But from a personal development perspective, I think like just understanding what you're good at and what you're not. And for me, like one of the things that I'm not so good at is underwriting a deal, right? Getting in Excel, understanding like,
Yeah.
the NOI and how to improve that. And so I lean on Sarah, I lean on my mentor for that. And so I just kind of really like double down on my strengths. And then for the things that I'm not so good at, I kind of distribute to other folks so that I don't like waste a bunch of time just doing stuff that I
But
know,
but that's a part of growth.
Yeah,
I think growth is accepting what you're good at, what you're
yeah,
not, and where you need to grow, right?
yeah,
I know you're doing the work to grow in
yeah,
that area. Like I know you've been doing that. So like I think, that's the part of, the company and like why I started was, I actually made this joke. I got a trainer now who trains me on like Monday mornings.
yeah, yeah,
Brutal, killing me. But she's like, "Hey, should we take a little weight off? What do you want to do?" And I'm like, "No, I need to get stronger. Don't make
right,
this easier for me.
yeah,
Like
yeah, yeah,
I ultimately would love this to be easier, but the only way that this becomes easier for me is if I grow into
yeah,
this."
facts,
And I
yeah,
think if we change, like that's the purpose of like Izzy AI is to like,
yeah,
how do I create a culture
Yeah.
of that?
Yeah.
Like instead of your life becoming easier, wouldn't it feel so good for you to get stronger?
Yeah. No, that's true.
And that could be physically, mentally, financially, everything you said.
Yeah.
Those three buckets. Love those
Yeah.
buckets.
Yeah.
And so like, now, where you are now, right? Like obviously fatherhood, both know that that's challenging.
Yeah. It's crazy.
Like how do you find the time? Like
Yeah.
I think everybody wants to know, like as a parent, how
Yeah.
do you find a time to accomplish your dreams, be a good parent, be a good
Yeah.
husband, do all these things?
Yeah. You got to make the time. I mean, like,
Love it.
you just gotta make the time. Like we got, I mean, we got two kids. We working. We're doing the entrepreneur thing. We got friends and family that we got to keep up with. I'm doing 75 hard, which means I got to do 2 workouts a day. I got to read. So it's like, just make the time, bro. Like if it's
Yeah.
important to you, you just got to make the time. Like when out for Thanksgiving, it's a funny story. Like I wasn't able to get my workout in before I went to go eat, and so
Ooh,
at like
tragic.
6, 7 o'clock at night, told Sarah like, "Hey, look, I still got to get these workouts in. Like it's got to get
Yeah.
done, right?" And so it's like whether it's after the kids go to sleep or before they wake up or during their nap time, like finding an hour or two to like focus on what you need to focus on. And the reality, like you don't need to be spending, 4 or 5, 6 hours a day doing entrepreneurial things, right? Like
Right.
you got to figure out what needs to get each day. Spend
Yeah.
an
How to
hour.
be more productive in the
Yeah,
hours you
yeah,
do,
because
instead of like the total time of hours.
yeah, yeah. And I think a lot of the time, even for me, like before I started reading this book, like I was just like spending time on things that weren't really that important just to feel like I was doing something and it wasn't really super
Yeah. Being
effective.
busy just to be busy.
Yeah. And so
Yeah.
now I'm like, I don't need to do that. Like I need to focus on this and this and this, and this is what I'm focused on getting done today, as opposed to like,
Yeah,
all
man, that's
right,
such a good
well,
point. Like, I've thought
yeah,
about that a lot more too lately. Is like, instead of stressing so much about how much time I'm putting into like,
yeah,
my job or like my company and all these things and like being a parent, it's like, how can I be more effective?
yeah,
Like, isn't that the goal? Like, how can I be
mhm,
more effective with like less time and
yep,
just scale my time? And so, to your point, like, I got to train her. Now I'm getting up earlier. I meet her
yeah,
like super early at like the local gym.
yeah,
But then, when I get back, like, I do have that, like, I'm just making more if I
yeah,
get up earlier or I stay up later.
yeah,
But like, you don't have to be like a night owl or,
yeah,
a super early morning person to get these things done. You just got to be effective in the time that
yeah,
you're doing it.
yep,
That's, I notice, like, when in you I notice too, like when I'm at lunch with like Sammy and the boys,
yeah,
I give my son my phone. I let him watch like whatever he wants to watch.
yeah,
And that forces me to be present at lunch. My wife's like,
right,
that's the greatest thing. I don't care about your company. I don't care about hitting quota at your job. That is the greatest growth you've
yeah,
had this year is like when
yeah,
there's lunch or dinner, like either watch it with him or like, and then before bed, we just like, we play. Like I leave my
yeah,
phone in the room and like we play right
yeah,
before bed. It's not that much time, right? That's like an
right,
hour,
yeah,
but like that's how you dedicate. I would rather have a very meaningful hour than me sit
yeah,
around on my phone with him for three
right,
hours.
yeah, no, 1,000%.
Like long-winded way of saying that, but that's the personal growth. And so yeah, I think like now where you're at, obviously, you're thinking, next, like how in your mind do you think like, what, let me take that back. Like what in 2025,
Yeah,
what's the big goal for Anthony and Sarah?
yeah. Big goals, man. We're trying to lock down this partnership. I think I told you about that, and it's
See how I
like,
leaned you in there?
yeah,
Go ahead and give it to us.
basically, like, I won't say the name just because it's not
Yep,
official, but
for
like,
sure.
it's a startup in Atlanta, and they own a real estate firm, and they've got 400, 500 units at this point, and they're doing some really cool stuff with like real estate and technology, and they want to work with us because we have a group of athletes that we work with called AIC, so the Athlete Investment Collective, and basically like they see value in partnering with us because we've got these athletes that are still playing that can help kind of grow their brand essentially, right? So in doing so, they're willing to give up some equity and stuff like so. That's the biggest thing that has been taking a bunch of my time right now is just trying to like finalize the documents and get that across the finish line. And then outside of that is just trying to maybe focus on acquiring one or two large scale multifamily deal, right? So 75 units plus. And so those are the two things that I think will kind of keep us occupied in 2025.
That will keep you very, very
Yeah.
occupied.
Yeah. What about you?
Oh, man, it's not about me, but uh, I'm mainly just, as you know, right? Like just mainly trying to really get user feedback right now on the mobile app. Man, I've
Yeah.
done a lot of I've been on the road. I went to
Yeah.
spoke at Ohio State, spoke at my high school, and we're at about 110 users right now in the first two
Man,
weeks,
that's a
which
blessing. Yeah.
is like honestly, it's like in the grand scheme of like software, it's like not that much.
Yeah.
But the fact of going, and this is just like so powerful, I want everybody to know, it's like the fact of going from idea
Yeah.
to business and users or customers in 2 months span of time,
Yeah.
I'm just more proud of that than like the total number of like users because
Right.
I think the biggest issue around depression is the lack of human progress. Like
Sure.
if you don't believe you're making progress in whatever you're passionate about or trying to do, it hurts, man. You think
Yeah.
about it all the time. It sucks.
Yeah.
And so for me, I got to be a little more kind to myself. I think that's
Yeah.
like the big goal in 2025 is like be a
Yeah.
little more kind to myself and look at the progress versus the goal.
Yeah.
Like obviously the goals here, whatever, but like just focus on the progress.
Yeah.
And the progress in 2025 is like just growing the user base,
Yeah.
really understanding how to add features that are valuable. Like I have a bunch of features in my head that I want to
Yeah.
add, but like what's valuable? And the
Yeah.
reason I was asking some of those questions in the beginning for you was, how do you measure your growth?
Yeah.
And what I plan to implement, we're actually working on right now, is a growth score.
Okay.
So for those who have a Whoop, for example,
Yeah.
like I get a sleep score every night on my Whoop. I get a strain score. So it kind of combines my strain with my sleep and my recovery to let me know a
Yeah.
total score of how I recovered, your
Yeah.
Whoop score. So I'm
Yeah.
trying to do a personal growth score. Where
Yeah.
like, Anthony, you've spent 4 hours on your growth this week. Your score is only 40%.
Sure.
How do we increase your growth? What do you want to work on? What do you think you need to work on? And so
Yeah.
just being a lot more data driven about personal growth and making that accessible to all. Like
Sure.
that's the big thing I'm focused on in
Yeah.
2025.
Yeah. That's dope.
Also, getting my son to sleep through the night.
Yeah.
You see, bags under my eyes. He
Yeah. Yeah.
killed me last night, man.
Yeah.
So I didn't even work out this morning. Don't listen, listeners. Don't listen to that. That's like never happens. I did not work
Yeah.
out this morning. So, but yeah, man. No, that's like the big goal in 2025. It's just
Yeah.
keep growing, stay focused, keep everything going. So anything you want to, because I actually had some friends. Because I
Yeah.
told them I was like bringing you on. I got some friends
Yeah.
who are in real estate, right? They're like, man,
Yeah.
I can't wait to hear this episode. Anything you could give back to tomorrow's voices
Yeah.
around how to get just like overcoming the fear of how to get started and staying focused enough through the tough times of the business
Yeah.
to ultimately get what you want.
Sure. Yeah. I mean, I think the first thing, like we already kind of alluded to, was just like surrounding yourself with people that are wanting to do it or that are already doing it, so that they can kind of help mitigate some of those fears and answer some of those questions that you may have. Right. Like that's the very
Yeah,
first
just
thing.
don't get
Right.
stuck talking to yourself. That's
Yeah. 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 Like talk, bro. Like it's so that's the first thing. I think the second thing is once you identify what type of real estate you want to do, single family, there's multifamily, there's retail, there's land, right? So there's so many different things that you can do. You just got to figure out like what lane or what lanes you want to pursue. And then once you kind of figure out that, then you say, okay, I want to do single family. Well, then what market do you want to be in? Do you want to be in Ohio? Okay, where in Ohio? Is it Columbus? Is it Cincinnati? And so like really be hyper focused on like those details that I think you can kind of probably figure out on your own just based on research and stuff like that. And then
yep,
going to a mentor and say, hey, mentor, I've done some preliminary research on like the strategy, the markets, what does it cost to work with you? Who have you worked with in the past? Can I get some references? What are your thoughts on what I've come up with to date? And then help them, like have them help you and guide you to make the final decision, right? And they may
yep,
say, look, single family in Columbus, this price point, this neighborhood, this is a strategy. You should focus on flipping instead of rentals because of X, Y, and Z. And that way you're like, okay, cool. I was able to kind of supercharge what I wanted to do by paying this guy a couple thousand or whatever it is. And it helps me kind of mitigate some of my risk. That's the how, right? That's how you do it. And then continue to just kind of scale from there, right? So that's what we did, and it worked well for us. And I think that's kind of the best approach. I mean, you can read books all day long, listen to
Yeah, you
podcasts.
got to get out there, man. You got to
You
get
got to get
out
out there
there.
because,
You got
like,
to
at
get
the
out
end of the
there.
day, like, you go to a podcast, there's not going to be many stories that really relate to what it is that you want to do, and like they're going to be like off topic, and so it's going to be kind of confusing anyway.
Yeah, and
So
I tried to, like on with this one, right? Like I know we really, dove in there, right? And
yeah,
I try to do a little bit more of that because,
yeah,
a lot of the podcasts you listen to sometimes are a little high level.
yeah,
Again, right? I appreciate you just being super open, honest,
sure,
transparent.
yeah,
It's, it's funny. I had like my mom's like coworker. She's like, "Hey, how does my son find the rest of the podcast?" Like
sure,
he's like 19, and
yeah,
I was like, "Okay." So
yeah,
like it is doing what I actually thought
yeah,
I
yeah,
wanted it to do, right? And so like that's the whole point. There's just such a group of kids and people out there that like want to do what you do
yeah.
and you've been successful doing it, like gotta share it. So man, I appreciate you just giving back. It's been awesome.
Absolutely, man.
Anything else you want to leave? You want to leave the listeners with, man?
Yeah, no, man. I appreciate you, man. Like, I know we've been friends for quite some time now, so I always appreciate us just kind of challenging each other,
For
brainstorming
sure.
together on ideas. And then for those that are looking to just kind of start something, I would just say, like, I mean, I'll say this again, like, find a group of people that you trust to kind of brainstorm ideas. Find a mentor that can help guide you to to the moon, essentially, right? So outside of that, man, I think you've covered it all.
Awesome, man. Well, look, I think the summary of that is don't tell yourself no. Like
Yeah,
go out, force people to tell you no. I tell people that all the time. They're like, "Hey, should
yeah,
I interview for this job or should I do this?" I'm like, "Look, the worst they can tell you is no. Like
yeah,
don't tell them no like, for you. Like go
yep,
make them tell you no."
yep,
And if they tell you no, at least you're going to be a little further because they're going to give you something. They're going to just be like,
yep,
"Absolutely not." They're going to give you a
yep,
little bit and you're going to be able to get to the next person that might tell you no again. And I just
yep,
told the kids back at my high school, I'm like, "Guys, I work in a job that if you're a 20% close rate, you're one of the best in the country."
yeah.
So, guys, 80% of the time, I suck at my job, but it doesn't matter. I only need to be 20% here.
Yep,
Like,
yep,
so that's the same thing in business. The same thing in like 20% of something is better than, you know, nothing, right? Like,
yeah,
so just keep
yeah,
pushing, keep going,
yeah,
appreciate it, brother.
yeah,
We'll get this one out, but like I said, tell Sarah I said hi and
yeah.
I appreciate you.
Yes, sir. Thanks, bro. I appreciate you.
All right, man.
All right. Talk to you later.